Hello and good day to everyone. I am from the Dr. Niki team, and today we will be covering a relatively new trading strategy that will be done with the help of the Schaff Trend Cycle indicator, also known as STC or just the Schaff Trend Trading Strategy. We're going to do some testing, see how it holds up, but of course with all these different indicators nothing is certain. That's why you should probably combine multiple of them to get more information from each and combine that info to go on off to. But before we head into that, I'd like to ask you to wait until the end of the video, where we'll give you a bonus from our sponsors for today's video, MEXC. MEXC is a user-friendly digital asset service provider, and they are giving to our viewers $525 worth of things that you can claim. But that's not, of course, everything. FTMO. If you think you're a real trader and you can actually prove that to FTMO, they can give you up to 200k of other people's money to trade with. Yes, other people's money. And you can keep up to 90% of the profits for yourself. Of course, you have to prove that to FTMO. Trade with other people's money as long as you can prove that you have the knowledge and skill to do that. So, we can continue further now with all this gotten out of the way. Oh, no. Last thing. Remember, hit like, hit subscribe. Don't take this too hard. We're just random people on the internet talking about strategies. None of this is any financial advice. Okay, so let's continue on. So, the STC indicator. What is it? Well, by definition, it's just a forward-looking leading indicator that generates faster and more accurate signals than previous indicators. It's mostly compared with the MACD because it considers both time cycles and moving averages in combination with some other indicators like stochastics. But to put it in simpler terms, it's an oscillating chart that has two boundaries, and they are used to indicate where there might be a possible drop or increase in the asset's price, depending if it's overbought or oversold, with a 75 line and a 25 line. Right now we're in TradingView, and to add it to your TradingView, you just go to indicators, type in STC, and it will pop up. There it is. It even says a better MACD. Click it. And boom, there it is. As you see, nothing quite special. It's just an oscillating chart. Nothing quite special visually, but believe me, quite special in terms of calculations and variables. So, there are the two lines, 75, 25. Let's start with a simple example. So let's say for here, above the 75 line means that you could possibly expect a drop. And as you can see, where the cross section happens here, it starts dropping. You see quite the huge dip, and it stays there for quite a long time. So the 25 line means that at any point while it's in here, it can start going up. It can do a trend reversal. So as you can see, it actually holds it quite a long time in that region, and here, boom, starts going up. And the same here, actually. It's this usually not how it goes. Usually quite shorter cycles. Holds, and boom, starts dropping. But you can't really rely only on one indicator. That's why I like to use EMA with it. I'm pretty sure that most of you are already quite fond of moving averages. It just takes the X amount of closing prices and divided them by the X given. Right now I'm set it to 200. Most people use 20, 50 or 200 because that's usually most commonly used by most traders in the world. And also I use ATR for my stop losses. And these are the three indicators that you can use on a free version of TradingView. And just follow my lead as well. EMA, I don't think that it needs much explanation. When it's above, possible drop. When it's below, possible increase. But you can just follow one. You gotta use all your technical analysis skill and knowledge that you have to do successful trades, like in anything else. Okay, back to STC. Stop rambling. So we see increase 75, small dip here, and bam, starts going down. So what you would usually do around this zone, you would go for a short. Let's say here. I'd go for 1.5 to 1.5 to 1 ratio for my stop loss, and on a shorter time period. And as you can see, it's a possible win here. Okay, let's see further down the road. These spikes are not recommended to be traded in, even though the price shot up quite much. It closed down. So judging by the EMA, you can see they actually don't tell the same story. Here we see indication for price going up. Here we see the opposite, but we have an increase here. Okay, so just an example here. It shot down. Here you can't really judge anything from AMA. And here you see it going up, right? And a possible increase. But you can just judge from STC. Look at the candles. Just a second. Look at this candle. What does it look like? Doesn't it look like a reverse hammer? Or as it's also known, 38.2% candle? Let's see. Click on your Fibonacci tool and let's measure it. Yep. As you see, you just cannot rely on one indicator. By combining both the EMA, STC, and your basic knowledge skill, you can have more correctly predicted trades. So, not only this reversal is indicated by the EMA and the STC, but also by the candlesticks. Also, I think you've noticed that I'm using here the Hikinashi candles. I just prefer them. So, if we put our short here as well, to 1.5 again. You can see that it's another win. Okay, further down the road. So things start getting a bit more clearer after that. Not quite the mess it was in the beginning, but still, you see, it goes up the 75%, and it starts going down. Decrease. You would also want to short here as well. Boom, win. Here it starts going up. Here you see a little bit of a fighting. I call these fighting candles, and usually it's quite unpredictable what happens after them. But judging by this indicator here, by the STC, you can bet like an uptrend here. Let's just risk it. 1.5 to 1. Not every trade, of course, will be a win. and it depends on how much you actually wait on it. No, actually, you know what? 1.1 was good here. And it's possible was. Anyway, going out. Looks like most of the things here are better for shorting, to be honest. Whoops, my mistake. Here as well, you can short after when seeing going down below the 75. I'd go around here, 1.5. Does it close? Yes, it does. Going forward, and here is something interesting. You see the this momentum candle here going up, and I'd actually put a long here, like this, and you see that it corresponds with the STC indicator, but not with the EMA one, but it does correspond with the candlesticks. That's what I meant by using more than one indicator and not trusting only one source of information and getting your basic knowledge. Here as well, so it holds up, big dip, short. 1.5. Increase, long, immediately. You can just tell by the candles. Quite the inertia there. Holds it, dip. Too small to play, and so on, so on, and so on. So pretty much you can combine all of these indicators to have a relatively successful strategy. And if you can manage at least hitting like 60%, as you can see, you have a very good net profit just by taking 1.5% profit and your stop loss being at 1%. So that's pretty much for the STC indicator. I hope that it helped you at least a little bit getting into it. You of course have to practice this, read upon it. I'm just giving you quite the little resume on it. So all in all, good luck in your trading in the dangers.